All right, my beautiful people. I hope you're having a wonderful Friday evening, getting ready for the weekend. Be safe out there, and hope you have a good trading day today. It was awesome. I'm going to go over today's trades for Friday. We're going to see the trades I made. It was a very rare occurrence. It was pretty much all the trades hit. We're going to see some trades for next week that we're going to talk about. I'm also going to bring those up in the watch list. I'm going to talk about that and how to know when to buy a contract or exactly when to buy a contract. So this is a hotly debated question. It comes up. I'm going to give a good but bad example given these are weeklies. You will see a non-weekly on there, and all these are the trades I made open and closed today. You'll see there's that one, but a lot of them were pretty crazy. It was about, I think, a few thousand percenters in a row, $5 open price to 11 cents, and then 95 cents, $25, 25 cents to $2.10. The Roku, we'll talk about that. The HD, 69 cents to 118. And again, we're going to talk about that for those who played the HD and have been on the watch list. And Disney, 23 cents to 35. And again, you probably saw that if you were on stream. We did this live, so make sure you are subscribed. We're going live Monday through Friday, 30 minutes before open. So it is pinned in the comments, the description, but shout out the chat. Make sure you guys are there. We had an awesome day today. Even actually, shout out to chat for this play. Wells Fargo, I got to give credit where credit is due. Pay the plug, pay the chat. Hopefully I'm helping you guys out. That's my service to you guys. This was all the chat. They called it out. So we had reasoning behind this, and that is what's going to go into the strategy, talking about exactly when to buy a contract. So yeah, let's get into it. As always, though, make sure you guys drop a thumbs up on the video, support the cult, and also, if you just like the video in general, I'm trying to gauge how you guys feel. Do you guys like these videos highlighting these plays, both the ones I have made and the ones I haven't? I'm trying to give you guys a mix and show you something that you could learn from. And again, paper trade these, and what I'm highlighting, all of these contracts were daily contracts. There's one that went out for next week that had a little bit of time, so please understand this is super risky. The odds of these are super low. That is the exact reason why these contracts are so cheap. That is part in and of itself a strategy. However, it is still super risky. You guys paper trade these, watch these, but understanding and watching how these move, you could actually learn a lot about other contracts as well. So hopefully you guys are safe with this and be smart with this. Make sure you guys are also subscribed here too. We're going to post the watch list every night, but let's get into it. I'm going to start with the plays. I think I'm going to keep this screen up. Maybe we'll make this bigger so you could see the option. You can see the option a little better and, the time of the stock. But let's hear on the alerts. I want you guys to see the timing of everything. Where are we? There we go. We can see from yesterday's close till now. So the first trade of the morning was Roku. So I guess we might have to actually focus on that play. But that was the 56.50 put at 12 cents. So we'll watch that and watch when I bought it. But I actually want to go to the Wells Fargo because this was my favorite play personally. It was 5 cents to 95 cents. But I want you guys to see how I played it there. So 10.26 is when I purchased the first contract. So where is that? Right here. So there it is at 10:26 a.m. You can see in the bottom right there, and it's at 5 cents. And I actually got it kind of on the high of the candle. I remember I paid high for it, and I saw it drop for a little bit, but then it shot up. But then I want you guys to notice what I did with it. Again, this is a put contract, and I'm going to show you the stock and the reasoning why, and I'm going to talk again exactly when to buy the contract. We're going to talk more, but I'm going to highlight these plays. But this was a put contract, so I got someone to agree that by the end of today, they agree to buy Wells Fargo from me for $57 or $47 a share. So now, that being said, let's see why they were willing to do that and what influenced that reason to, get understanding of why this contract is so cheap. And again, that'll help us understand how to replicate these plays, how to find it, and even understand option pricing. But 10.26. So there you go. It was about the second. It was the second candle right there. And again, shout out to chat, man. They gave me the play. They put it in the chat. And again, I knew right away it was something on the call, so I reacted fairly quickly with a big amount. I was going to go 25 cents. Again, I did 5 contracts at 10.26 for $25. So I'd put $25 to scale in, see what was going to happen because I knew they had earnings. So that is one part of the segments that we're going to be looking here. Every play kind of has a unique factor to it. And then we're going to go to the kind of universal factors. But Wells Fargo had earnings this morning. They reported it was decent. They had some good segments, some bad segments, but overall they were good. At JP Morgan, another bank, did very good, so that was very positive, and the market was positive. So Wells Fargo, it had an interesting, time. If you guys want to see how it reacted even after hours or pre-market, it, what was with the market, went up, shot down, went up, and then out of nowhere in the middle of the day, so let's turn off the pre-market, it dropped, and that was because it was on their conference call. They announced that their guidance for the end of the year was lowered, and they're not really expecting it. So again, the bank was pretty weird. It's different than some of the tech stocks and earnings we see where they report after the bell and all that, and I'm sure you guys have questions, why would they report after the bell? But at the end of the day, you have different companies with different philosophies, and usually it shouldn't be anything too big of an impact, but that was pretty much a guidance, while the market was open, so it started to drop. So that's why I reacted really quickly, and that's why the option was cheap too, because now Wells Fargo wasn't expected to move a lot. Again, even in this day, it already had the earnings, that premium dissipated, but the contracts were expiring. Now, I even forgot to even mention the whole part. The whole point, another point I get to mention about this video, I get to brag about these were all in the watch list. If you guys go to the description, the first, I'll put it as the first link, we called out the next play I'm going to show, UNH, but even this whole strategy I've been highlighting for the last few days now, maybe even a few weeks, of playing it near these expiration dates and pushing it against the wall, and why these contracts were so cheap. So Wells Fargo, the contracts were holding a decent premium. However, at the end of the day, it wasn't expected to move a lot. That's why these puts started so low, and again, it gapped up today. They had earnings. There's no other reason why you should see Wells Fargo move up. Again, the stock this morning was at 47.93, and then it went up to 48.80. Why would, by the end of the day, people were saying by 10:30 before, as this news was getting announced, though, these contracts were worthless, because why would anybody expect Wells Fargo to drop below 47? So that was that play. That was the reasoning behind it. And again, I'm going to highlight again the Friday thing. I want to go through these plays so you could see every specific example. But that was the first one. What is the next one we could highlight? The next one, my next favorite, I'm going to go to UNH. And this one, come on. This one was my favorite because I said yesterday on the watch list to watch this, and I called this main one out, and I said, watch these exact contracts. And this is part of, you could call it the strategy more or less, but what we were talking about with it was, again, the Friday expirations on these dailies. And now you could do the same thing if you watch my video with the swing trading, finding these contracts that had value and then got quickly depressed because the underlying stock made a big move. But in this case, UNH went down a lot yesterday. So no, I do not want to buy UNH. So let's see here. UNH, you can see the 5-day chart on the week. It really started to drop yesterday, and it came back up a little, and now we called this on the watch list because I said something's up with that. Even throughout the week, there was weird movements within pharma and even the healthcare stocks and the health insurers and whatnot. But from there, UNH's contracts, they dropped. The contracts increased a lot because the stock dropped so drastically. But that was what I was saying with part of the strategy, is that even if you look, and we could go to UNH's option chain, even if you go out to next week, like even at close today, and if you go watch my video that I made, I posted it yesterday, the one on pricing in, it was in the watch list. It was literally just go watch the watch list. I talk about pricing in and the watch list. That was even why Disney even came up. We're going to even go see that Disney play. But UNH here now, you could see from yesterday, the contracts were expensive yesterday. They went up even more, but now the puts, it closed at 22.40.90. Let's see, 22. So that's pretty much it's like $1 away. Well, so it's 10 cents away from here. So these are about in the money, 6.80. These contracts are pricing in a $6.80 move by the end of the week tomorrow. That's why they're selling it at that much. They're expecting it to move another 6.80 or another 2% by the end of the week. And now UNH also has earnings. That's a decent amount, but not really. However, at the end of the day, even if you played these contracts, you weren't really seeing kind of the crazy gain we did. You still could have played a great next week and set yourself up nice for earnings. So I did pass up on that by going on the weekly, and by doing that, I could have took a little bit more safety and I would have took less gain. But on here, the object was go for in the money, and that's what I said. Highlight the contracts that got expensive, and then wait till they become cheaper again, and then go for them in the morning. And we got a gift on UNH, because if you see how it opened up, I thought it was crazy, man. It just opened up and it stalled there at that same price for us for about like 10, 15 minutes. It dropped a little. It was outpacing the S&P, bounced a little. It just started outpacing the S&P, and that's when we got it. So when did I buy it? I bought it at 952, a 230 put for 25 cents. So let's see, at 952. Yeah, so 952, the stock, it was already dropping, and I had a good chance to average down on it again. I even said, even on there, I said it was a little bit risky, but I liked it. It was looking pretty decent, and again, we had it on the watch list. It looked like it was leading the market, so we took that. And again, the reasoning behind it, understand that. Even the Wells Fargo, and I forgot, I'm going to go back to the Wells Fargo play. I didn't finish that play for you guys. I was getting a little excited there, but I really like this UNH play. But the point here was understanding it was coming off the continuation. There was other news. The biotechs were getting affected. It was loose. However, the moves were happening. It is leading up to earnings, and the contracts were there. The contracts had high implied volatility. They were moving. However, the contracts on that Friday, they had to they move around a lot. And as you can see, there's a lot of contracts that had big movements today, and some ended up zero. Literally, if you didn't end up right on the dot, you lost. So you have to be careful with these dailies. But we bought that at 952 for 25 cents. So a 230 at 25 cents. Where is the contract? Man, my thing messed up. I had the wrong contract up the whole time, but 952 at 25 cents. So literally right here, this was like the first movement again. The stock was, if you go look at the screen here to the right, the stock wasn't doing much. So come around 952, you could see during this whole thing, it wasn't doing much. I got it at 25. It went up to like 30 cents, came back down. We could have got it cheap at 15 cents. And then the stock really started moving, and it slowly started picking up, and then eventually it became worth money as it got in the money. Now, here's the problem. I'm going to finish this play on like I did with the Wells Fargo with you guys. I bought it at 952, and then I sold it by 1038. I didn't even hold it for an hour. So now by 1038, it just kept going up. I was like right here. I sold it at like 210. Right at the bottom of this candle, it just kept going up. We'll see where the stock was at, and I just wanted to get out. So where was it? 1038. So it was in the middle of a red candle. I thought it was going down a lot. I was like, it's a weekly, it's early. I wanted to be safe. I wanted to scale more. I got in $20. I didn't go after that, but I sold out. It bounced right away. The contract, it didn't lose much value. That's what sucked. And then it quickly came back down, kept heading down, and that's what set me up to get the gold on this one. So, but I sold out. But again, the problem was on this one, I sold out way too early. This contract literally closed in the money because UNH ended up at 223. It ended up at $7.78 is what this contract was worth. So I bought it for $25. If I held it till the end of the day, it would have been worth $778. So I got $200. That's still 1,000%. But I guess I could have got another 1,000 or 2% on there. However, and this is where you get to see why did this contract end with value? Some of the contracts on the option chain, they're going to have value. Some are going to end up in the money. Some aren't. That's just the name of the game. My chain gets weird and messed up there. But as you see, these puts right here, the ones right below it, these didn't end up in the money. They lost their value. These ones were right there in the money. They have intrinsic value. Again, why do they have intrinsic value? Because you got someone to agree to buy the stock from you. So that contract, I got that in the morning. I told someone, hey, the stock's going to drop another 2%. I'll pay you $25 if you agree to buy UNH from me for 2.5% lower by the end of the day. They're like, sure. And then it ends up dropping 4%, 4.5%. I get to make the 2.5% difference. So that's a big move. That's a great move. That one was really exciting. Again, watch the watch list video and watch the last week's watch list videos. We kept talking and bringing up these topics with the contract. So there was that one. And back to the Wells Fargo, if you guys want to see that one, what happened with that play, if you guys go back to it, I bought it at 5 cents I bought it at 1026. And where is that again? Right there in that first candle right before it ran up. And then, though, if you go and you see right above at 1031, a few minutes later, I sold out at 11 cents on 3 of them. So again, why? I bought 5 of them for $25, and then it went up to 11 cents a pop, so I sold 3 of them out for $33. I got all my money back, and then I got to hold the other 2, and then I was going to sell one out again at another price 4 minutes later, and then it kept ramping up, so then I just held it. I sold the UNH, then you get the C, and then I eventually sold at 1048 or 1046. Talk about a sell. The remaining 2 contracts, those 47 puts, I sold them at $95 a pop, so I top ticked that, right? I think I got the highest trade in there. They dropped. They still actually ended up in the money because Wells Fargo ended below 47. So again, I got somebody right there to agree to buy Wells Fargo from me for to buy the Wells Fargo by the end of the day. They agreed that they'll buy it from me for $47 a share. It closed up at $46.30, so actually that's a $70 share per difference. So these closed at $57. That makes sense. With a $20 exercise fee, you're looking about $70 a share. So I could have, you could always exercise. We're not going to talk about there, but that's why that played made money. But that one was was my, I don't know, UNH or those. Those are my 2 favorite, but. And then I also, you guys can see for next week, we'll talk about the Boeing and PayPal. Then I sold the Disney and then the Home Depot. But let's actually go back to the last play. Well, the last one was Disney. And then the Home Depot, if you guys watched, that one was another play from the watch list. So here it are, or this one. You see I bought that one at 60 or 70 because I bought that at the beginning of the week. I bought that at 409 on April 9th, so a few days ago actually. Yeah, on Tuesday. And I bought it. I got it at 70 cents. I thought it was a good deal. It dropped, but then on this account, so I'm holding some on this account. I went and bought the other ones. Oh no, excuse me. On this account too, I think. This account, I have another set that I bought again at 30, and again, we put those on the watch list. A lot of people got them. They shot up to 120, but they went up to 118 today. That's what I wanted to cover I was around my cost basis, so I sold out of those. But then the last weekly play was Disney and then Roku. But actually, let's go back to Roku. I want you guys to see Roku because that was the first trade this morning, and we didn't get to see actually what happened. That one expired worthless. Why? Because I'm a degenerate, and I cut the Wells Fargo, I cut the UNH, I hit every single trade. I was like, all right, I'll let one ride. I wanted to let the Roku. It kept bouncing. It was up about 200%, but as you see, I bought it for around $12, I think, in the morning. Yeah, first trade, I bought it for $12. It went up to 70 cents, so 500%. Then it came down and edged down, but Roku, it closed right at the money. I had to sell it for $1. Because it would have closed in the money and I would have been exercised, and I didn't want to. And honestly, I didn't want to call my broker, so I'd rather spend $3 or take the loss. I think I lost 16 total, but yeah, so that one lost. And then the Disney, that was the final one. I think that was a YOLO bucket and people hit it. And I actually played it on this account, but it was the Disney contracts today. And again, this one was another one that I highlighted in the beginning of the watch list. You guys have to go check that out, especially if you're watching this far. You're probably interested. And there's, a lot you could learn from these plays. But we played today the 129s, and I think Sheldon Mills, he got those 128s. But these were the players, the same exact strategy. These shot up. Again, Disney had a catalyst, expensive contracts. There was going to be expensive contracts. They were all priced again for Disney, but the whole point of this today, some contracts were going to lose today, and not everybody was going to make it, so the contracts were getting cheaper, and that's what we looked for. I bought these, and you could see how I used this account, because when I got the first Disney, I bought those at 1020, and I said this, if you guys go watch, it's pinned in the comments, the live streaming channel, you could see, I'm talking about when I buy it, and I say exactly what I'm going to do before I do it. But when I purchased these at, what time was it again? I purchased these at 10:20. Disney's pretty much capitulating, and I got them at like $30, I think, right? And then it drops, but then on the other account, I ended up getting these pairs. I got this pair around 19 cents, and some people got the 128s because I got these at 19 cents, and then they came down lower. But then, I got the 130s, excuse me. No, these are the ones I got. So these ones, that's why I only made $3 profit on this account, but the ones on the other account, I played the 129. So that's what I'm talking about here. And this is the one on this account, I got a trade on the 130 and I lost on that. And then 10, 20 minutes later, I went on here and I got these ones, and I got these around the 19-cent mark. They went up. I closed around the end of the day, but those went 19 cents to $1, like $1.20 or $1.30. But that was another, $20 into 500%. And these were all today. And as you see, that was every single trade I made today. And then I made the swings coming into next week. Actually, I did do a random gamble on Amazon. I did right at the end for 12. So that ruined the 100% streak. I'll be honest right there. But that and the Roku, even though I hit them. But for the most part, I guess technically in my own little mind, I hit every trade today. But that was a lot of fun. Hopefully you guys learned from it. Hopefully you guys learned from this really, really long video. Let me know what you guys think. Show me some love, and I might do a stream tonight. So keep your eyes out tonight or tomorrow. I love you guys. Much love. Show me some love. Be safe on the weekend. Enjoy yourself. Have fun. And I'll see you on Monday and on the videos. Goodbye.